In today's unpredictable world, investing wisely isn't just an option, it's a necessity. Trade wars, rising interest rates, AI-driven companies, and global conflicts are reshaping the stock market every day. So how can you protect your money and make it grow? In this video, we'll break down the latest stock market trends, the impact of global tariffs and tech revolutions, and share practical strategies to help you invest smartly in 2025. Let's get started. First, let's take a quick snapshot of the stock market in 2025. The S&P 500 is up around 12% year-to-date, driven by strong tech earnings, especially in AI and semiconductor sectors. But inflation remains sticky in some areas, and the Fed is holding interest rates higher than expected, above 5%, to cool down the economy. Meanwhile, global trade tensions, especially between the US and China, have intensified. New tariffs imposed in early 2025 on Chinese EVs, solar panels, and AI tech components are sending ripples through global supply chains. In return, China raised tariffs on US agricultural products and chips. This trade war 2.0 creates both risks and opportunities for investors. So, what's hot in the market right now? Two sectors, technology and energy. AI-focused companies like NVIDIA, AMD, and Tesla are continuing to dominate, not just because of hype, but due to real earnings growth. On the other hand, renewable energy stocks are bouncing back as governments invest more in green tech and try to reduce reliance on foreign oil. However, traditional sectors like real estate and retail are lagging. High interest rates have cooled home buying, and consumer spending is down as credit card debt reaches historic highs, over $1.3 trillion in the US alone. What does this mean? It means you need to be selective and strategic. Growth is happening, but not everywhere. So how do you invest wisely in 2025? First, diversify by sector and geography. Don't go all in on tech or US stocks. Consider international ETFs, especially emerging markets in India and Southeast Asia, where growth is strong and political risks are lower than China. Second, focus on quality stocks. Look for companies with low debt, strong cash flows, and consistent dividends. Blue-chip stocks like Microsoft, Apple, and Johnson & Johnson are safer bets in volatile times. Third, keep cash or short-term bonds. Holding some cash or investing in treasury bonds and money market funds, which are yielding around 4 to 5% right now, gives you stability and flexibility. Fourth, don't try to time the market. Long-term investing still beats trying to guess short-term movements. Use dollar cost averaging, investing a fixed amount regularly to reduce your risk. Fifth, be wary of hype stocks. Meme stocks and crypto fads can be tempting, but many have crashed hard. Stick to fundamentals and ignore the noise. What could go wrong? Plenty. Escalating wars, elections, banking crises, or another pandemic. That's why it's smart to hedge your portfolio. Consider owning some gold, utilities, or healthcare stocks, which tend to do well in downturns. And if you're more advanced, use stop-loss orders or buy protective puts on your biggest holdings. Remember, defense is just as important as offense in investing. The stock market in 2025 is full of opportunity, but also full of traps. Global politics, technological change, and economic uncertainty all play a role. But with the right strategy, patience, and mindset, you can not only protect your money, but make it grow. If you found this helpful, like, share, and subscribe for more investing wisdom. Stay smart, stay informed, and invest with confidence.